As we mentioned, it's the last day of the first half of the year. Now, looking at the markets around the world, we have Maitri Sitharaman in London and Paul Gordon in Hong Kong for the wrap-up in Asia. So, Paul, let's start with you. How did the markets do today?
Very well indeed. Mostly rising and taking their gain to 28% this quarter. That is the biggest quarterly rise since the MSCI Asia Pacific Index was created 21 years ago. The story, of course, optimism over a global economic recovery. Mining stocks have surged. Copper is on its best six-month run in 22 years. Oil stocks also climbing. Crude set for its biggest quarterly gain since 1990. We saw gains today. BHP Billiton, Sinopec, PetroChina, among others. Japanese exporters also gaining over the last 3 months on optimism. Markets for their products will revive, and in the case of automakers, perhaps with weaker competition. And we saw that optimism also reflected in Australia today. Credit Suisse raised its ratings on the retailers, David Jones and Harvey Norman, both of those stocks rising around 10%. Credit Suisse says discretionary consumer spending may recover. Chris.
Now, Paul, that might recover, but some reports out of Japan, maybe they won't have as strong a recovery. Is that right?
Well, it's looking a little like that. Japanese unemployment rose to the highest in 5 years. The jobless rate in May, 5.2%. That's up from 5% in April. Also, though, importantly, the ratio of positions available per applicant fell to the lowest since records began 46 years ago. There just aren't many jobs out there. The economy remaining weak. One major department store, for example, has begun its summer sales 10 days early. That's to attract customers. Household spending did rise in May for the first time in 15 months. That was driven, though, by government handouts. That's it from Asia.